Hello traders, Gary Wagner here, just after 1:30 in Honolulu, 7:30 in New York. Apologize for the delay, but this was a day that will go down in history with a new all-time record high for gold. Silver surging, breaking 29, on its way to 30, and we spent most of our morning looking at charts and figuring out where to move stops. We sent out a series of trade alerts with recommendations on your ETFs, along with your futures trades, as well as the Forex long gold trade. We will look at those trades in detail. We'll talk about those stops, but first, take a look at the incredible moves in gold and silver today to the price board. It was another historical day with gold and silver really going stratospheric in terms of pricing and the tact of their ascent to these new prices. Gold, all-time new record high. We're looking at December gold at $2,075.20, gaining about $26 on the day, and that is with a nominal move in the US dollar. When we look at spot pricing, that gained about $25 at $206.310, and silver really shined the brightest once again today, trading over $29 an ounce. After today's phenomenal gain of $2.12, almost a 8% gain in a single day, and it's not the first day we have seen that kind of gain in the precious white metal. And as far as the ETFs that we have been actively trading are concerned, when we look at the Silver Trust iShares, that gained 7.31%, $1.83 per share, and is currently fixed at $26.88 per share. GLD, the Gold Trust, gained about 1.33%, a total of $2.54 per share, and is now trading at $193.89. And lastly, Nugget lost 1.11% and is currently tracked at $112 per share. We did send out a special trade alert this morning recommending that we raise stops in both our futures, Forex, and ETF trades. We'll cover that in detail on the members page in Proper Action and talk about some of our targets during our technical studies. Traders, gold and silver continue to move sharply higher, in the case of gold, to unknown territory as it trades to new all-time record highs almost on a daily basis over the last couple of trading weeks. This morning we did send out special trade alerts recommending that we raise our stop. In the example of gold, we are recommending that you move your stop to 2035. We are in at 1997. In the case of silver, we're recommending that you move your stop on that one to 25.99. And lastly, Forex traders, raise your stop from 1938 to 2017. Currently, we have December gold at $2,082 per ounce. And with the jobs report coming out, we can expect that we could see some volatility. And what I'm trying to do is to capture the maximum amount of profits as this market moves up and give the stops enough room so if there is some volatility but still on an up road, it keeps us in. And if we get a hard move to the downside, we pull profits. As you know, on a technical basis, I have been looking at some models, but I have to acknowledge we are in uncharted territory. I'm still believing that this particular leg of the rally has some upside room before we hit some sort of correction. And this model is looking at somewhere around 2150 in terms of a point in time in which we could see the market correct, move down to complete this last fourth wave, and then come up to complete the final fifth wave of this historical rally. Nonetheless, the market could go much higher than 2150 before correcting, and it could correct at any point between current pricing and 2150. That being said, I just figured our safety factor at least locks in about 50% of our profits here and hopefully gives us room to weather any kind of increased volatility that we might get tomorrow with the jobs report. Silver has been in an absolute tear, and although it is not trading at all-time historical pricing, it has certainly outperformed gold recently, considering that silver was trading at, and this is a monthly candlestick chart, by the way, if we look back at the beginning of the year, it was trading just around $12. It is now at $29. It has almost tripled in price and well over doubled in price. The key difference when we look at silver is we can analyze where the market's been and where we have found some tops. And the first area that I look at in terms of a potential for resistance in the market, and I'm not saying the end of the rally, but where we see some sort of a kickback, is to look at highs that occurred back in 2012 and 2013. I draw your attention to this top here, coming in around 36 or $35 per ounce. Above that, we have this top here. I'll try to keep it as straight as possible, and that's probably coming in around $37. In terms of a support level, look at this one area here, and that comes in at around $25 to $26. We are well above that, but this is the area that I would label as support right now. This is the area where we have potential resistance. We are in uncharted territory in terms of gold pricing. Silver, we have some sort of historical database to look at what the market did when it was at these prices a couple of years ago. That being said, I am expecting extremely higher pricing in gold and silver. The question that remains is simply at what point will we see some sort of a correction and then return to the last leg of this rally. And traders, we also sent out a trade alert for our ETFs. What we are looking at is the original chart that we spoke about and that is up on our site for our initial stop in our SLV or silver trade. We got in at roughly $18.48 per share. We moved our stop to cover this gap, and at the time we put our initial stop at $20, and the market looks something like this. However, that has changed dramatically. We are looking at a weekly chart of the iShares Silver Trust, and we can see that it has moved up phenomenally. In terms of silver, we are recommending that you hold your current position, your long position in that ETF that we bought in at $18.48, but move our stop up to $23.80, which puts us roughly in this area right here. We have seen this market rise dramatically, and this is to make sure that we are able to get some profits out of the market regardless of what happens tomorrow. As far as GLD is concerned, we got in roughly at $16.74 per share. Initially, we had a stop at $177.25 per share, and when we raised our stop, this is the chart that we published on our site. It looks quite different now because GLD has moved up significantly. Originally, we had our stop at $177.25. We entered the trade at $166.74 per share, and our recommendation is to move your stop to $187 per share in terms of your GLD. What I did in my personal portfolio is I did sell all of my nugget because I'm seeing increased volatility, and I moved that money from nugget into primarily SLV because that's been moving the hardest. Lastly, we are looking at Nugget, the Gold Miners Index, and we entered that trade at roughly $73.62 per share. Our stop was at $88.66, but the market looks quite different now. It has moved up substantially. It was one of the greatest gains we have seen, and it is currently at $112. My recommendation is to cover your nugget at the market and then allocate those funds into SLV or GLD. We're getting some extreme volatility in this particular ETF. We've got, quite frankly, very nice profits on the trade. And so I'm asking you to rebalance the nugget and then add that to GLD as well as SLV. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow after the jobs report for the weekly wrap-up and review. Bye-bye.